Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 4th of November, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go through our usual run through on a Monday where we take a look at the slightly bigger picture outlook for the week, where the potential volatility points are going to come from a macroeconomic, fundamental, geopolitical perspective. So we'll run through that. Then we'll take a quick look at articles from the major news headlines and also take a look very briefly at charts. So, last week was all about the earnings, really, plus we had some macro data. These reports are available below where you're watching this in the trading room. We have three columns: the technical on the left column, the middle column is the fundamental reports that are published at the weekend, the right column, the news column from our partners at LiveSquawk. So in that middle column, we every weekend we publish the macro matters and then also the macro summary, which is a shortened version of the macro matters. And so basically last week was all about data, earnings plus macro data. Effectively in here we had a very mixed bag on the earnings reports. The most significant move was down lower on Thursday with some of the forward guidance so we had Alphabet, Amazon, Apple, Microsoft and Meta all last week, clustered Tuesday through Thursday. And the net result was, because of guidance concerns around some of those, we saw a notable sell-off back on Thursday. And then we after the employment report on Friday, which was much weaker than expected and counterintuitive, weaker than expected, then equals more likely for the Fed to be more dovish. So the stocks took that positively. So even though it was a weak report on Friday from the jobs report, the market took it as a positive because it means potentially more dovish Federal Reserve. So stocks a slight rebound, but only getting back a little bit of what they lost on Thursday, which was a significant sell-off after the amalgam of all of those results that we saw: Apple, Amazon, Alphabet, Microsoft, Meta. So, but the net overall was taken as negative, more from the guidance than it was from the actual numbers themselves. Turning our attention to this week, so we're on a kind of a negative footing. It was a down week, the first down month. In October, we actually ended up declining by 1%, having had a 5-month win streak for the S&P. And obviously a down week last week as well. But all focus now on this week, going into this week. We do get the Fed, which are pretty much nailed on Thursday to deliver a 25 basis point cut, but maybe looking in here at where the future guidance is. Are they going to continue to deliver those cuts going forward? But obviously critical is the US presidential election on Tuesday, or the overall election in here, the congressional election as well. So, and how that pans out and the potential aftermath of that. The chances are we're going to get volatility ongoing because there's not necessarily going to be a result come Tuesday night, Wednesday morning, or it could take days, it could take weeks, given a lot of what's been going on from previous elections and, a lot of concerns around, around that election and what may happen regarding the results. So that's only going to add to volatility. So really Tuesday onwards, we could see things get pretty busy in here. So if we look to, what happened last week, so equity slightly lower. Bond yields were slightly higher. Dollar index was kind of sideways, but near its highs. Gold futures hit a new record, then pulled back towards the end of the week. And oil futures positive in a wider range in here. As I said in here, the main focus of the week is going to be the Fed on the macro, on the central bank side. We also get the RBA as well in here Tuesday. Bank of Japan minutes Wednesday as well in here, and also the Bank of England are on Thursday as well, where a rate cut I believe is expected from the Bank of England. Main focus on the data side, we get global PMI data throughout the start of the week. US factory orders Monday, and obviously the other thing to note in here is US daylight savings time ended at this weekend just gone. So your local time zone now is going to be different. If you are not in the US, okay, compared to last week, and you don't observe daylight savings time, please be aware of when the opens and closes are, because they're going to be different because of the change in daylight savings time in the US. So if you haven't switched your clocks over this weekend, then you are going to be 1 hour different to where the US is this week going forward compared to previously. So please do be aware of what the time, what the time is in the US on the markets when the markets close in your local time zone, okay, because they would have shifted. Plus when the data is as well. So obviously around the Fed on Thursday, we're going to have a usual restriction on not trading 2 minutes before or after the data. So you need to be aware of that as well going into Thursday. We may have some restrictions for funded traders on the over the US presidential election night session, but we will send an email out regarding that. That will only be for funded traders, not for evaluation traders, I think. But we will get a note out on that if we do make that restriction. So looking into today, we've already had some of that PMI data that we said, the US, we got this I don't know quite why Europe seems to be delayed, but Europe was delayed in here as it normally comes out on the first of the month. But the European data coming out this morning, you can see, generally speaking, here France in line, but Germany and the Eurozone slightly beating, not big beats on the expectations there. Going into the day, though, it's fairly light now for not much going on. So probably looking for a fairly quiet session in here going into the day, given that we've got the election looming tomorrow on Tuesday. I'm going to stop reporting on the earnings now. You've had all those big earnings of the Magnificent Seven. You've had 6 of the Magnificent Seven. We don't get the final Magnificent Seven, and arguably, what the Goldman Sachs has monikered the most important stock in the world at the moment, which is Nvidia. That doesn't usually come until something like the 20 something of the month. It's quite late in the earnings season, so we've probably got to have a couple of weeks until we get Nvidia, and you can see there's nothing really significantly large going into this week. So we're not going to be focusing on this. None of these are going to impact on the major indices. Let's go through the headlines. US election heads for tight finish. It's on a knife edge, really. Overnight, we have had a poll that kind of hints at Harris doing better. Outliers from Iowa and payroll so confusion. So this article highlighting that in a state that Trump won previously in here, I think that Harris was seen as ahead in here. So where are we? Yeah, look, the dollar recoiled sharply from Friday's close after Des Moines Register Mediacom Iowa poll on Saturday put Kamala Harris 3 points clear of Republican Donald Trump in a state that Trump easily won in 2016 and 2020. So that's interesting. Obviously an important poll there, but it's just one poll, right, on one state. So, but nevertheless, markets have reacted to that this morning. So dollar drops as some US polls shift towards Harris in here. Treasury futures rise. Mexican peso also rising. Oil's rise as OPEC Plus delays output hike. What else? So this is all that traders prepare for a long, volatile election. I don't think it's going to be just a night. I think it'll be ongoing as well, because depending on which way the election goes, whether we actually get a result and whether it's we all know what's happened in the past, right? I'm not going to go into the politics of all of that, but there could be question marks around the results. So we'll just have to wait and see on that one. Futures gain as US polls, Fed rate decision looms large. So it's basically, and I don't think the Fed is going to be really significant at all because it's pretty much nailed on. We're going to be watching what the guidance is from the Fed. Mexican peso leads advance among major world currencies because it looks like and Trump trade doubts drag on the dollar. So positive, the Mexican peso moving positively because of the expectation of a potential Harris win. What else do I have for you? So on the overnights, actually, Japan was closed. You can kind of ignore that 2.63% down in here. Hang Seng up marginally in here this morning. European exchanges kind of mixed, but FTSE's up 0.6, but the German DAX pretty much unchanged, and the French CAC up just 0.25%. And on the US futures in here, just nudging higher in here this morning. The S&P up just under 0.2, and the Nasdaq up about 1/10. As I said, it pretty much nailed on. There's the expectation for rate cut, over 98% chance that we just get 25 basis points. But looking into, which is what I've been really looking at, March of next year, it's still kind of undecided whether we're going to get a rate cut every. So you think it's 4 meetings, that's 4 rate cuts. We're currently 475 to 500. So rate cut every meeting puts us on this column here, 375 to 400, which is obviously not what the market's pricing in. The market's probably pricing in a pause at some point, maybe a pause and a restart in here by January. We're looking at in here the most likely, which is 3 rate cuts. So the market's pretty much now starting to price in 3 rate cuts, 3 more 25s, and then potentially a pause at the March meeting in here. So that's what the market's starting to price in. Not much happening in the bonds. Actually, that bond market, that's not loading, but bonds are kind of consolidating near recent high yields, and I'll just try and refresh that, see if it will refresh, but if it doesn't. But bonds basically consolidating near recent high yields, and we can see that with bond prices near lows in here. So we sold off at the end of last week in here to new lows and continue that. So we're up at new kind of highish yields in here at the moment, low prices. So that remains bearish in price. Bullish also looking for upside in yields. We remember these were split previously. I haven't been on since we kind of shifted the view in here, but we did have the S&P as negative and the NASDAQ was holding on and slightly positive. Well, the NASDAQ on Thursday last week broke down through the trend line support, through some chart support in here. So now both setting up more negative going into today. But if we look in here, I'm probably looking for more of a consolidation. We did get a slight bounce on Friday, trying to bounce again in here today. I think there's a slight upside, maybe up towards Friday's highs, but not looking to get anything back here from Thursday. So maybe on the ES back up towards 5,800. But I'm just really looking for a consolidation today. We've got a lot obviously coming up, a lot of volatility to come, and similarly maybe on the NASDAQ up towards like 20,300 kind of area, but not looking for much more than that on the upside. If it undercuts lows from last week, then obviously we could significantly extend lower. But at the moment, markets I think are going to be a bit on wait and see mode today and likely Thursday as well. So not Thursday, excuse me, today and Tuesday as well. Ahead of kind of any kind of sniff that we get on what's going on with the election. So I think markets now going to probably be in consolidation mode. All right, guys, I'm going to leave it there. I'm going to wish you all a great trading day. Please do think about trading. I would suggest trading more cautiously at the beginning part of this week. You don't blow your accounts, right? You'd be better off. There's going to be volatility and options to really get into some good trades. I think going into through the election result as it comes out, and then through the Fed. So try and keep the powder dry, as we say. Try and keep your accounts live. Don't risk too much if the markets are just going to be in consolidation mode, unless that's your kind of trading. If you trade better in consolidation, then go for it. But I would be looking for more opportunities later in the week, Tuesday through Thursday. All right, have a great trading day, guys. Take care, stay safe, and I'll be back with you for another bull versus bear webinar tomorrow.